All right, today we are jumping into the real estate market in Gold Canyon, Arizona. We're going to break down all the key numbers and trends from the latest market report to give you a really clear picture of what's happening on the ground right now.
This is the question, isn't it? If you're a potential buyer or seller, it's everything. Is the market hot? Is it cooling off? Is now the right time to make a move? Well, to get to the answer, we have to start with the single most important metric in this whole report. And that metric is the Market Action Index, or the MAI. You can think of this as the market's pulse, its temperature check. It's this brilliant little tool that just boils down all the complicated stuff, sales rates, inventory levels, all of it, into one simple number that tells us instantly who has the upper hand, buyers or sellers. And here we have it, our top line answer. The Market Action Index for Gold Canyon is sitting at a 33. Now, the magic number here is 30. Anything over 30 puts us into seller's territory. So with a 33, we know it's a market with a slight seller's advantage. But trust me, that is just the beginning of the story. So to really understand what that MAI score of 33 means, we need to peek under the hood and look at the numbers that are feeding into it. Think of these as the vital signs for the Gold Canyon market. First up, the price tag. The median list price for a single-family home in Gold Canyon is right at $549,000. This is our baseline, our starting point for value in the area. Next up, how long are homes actually taking to sell? Well, the median days on market is 84. That means half the homes are selling faster than that and half are taking longer. Now, hang on to that number because it's going to be a really crucial piece of the puzzle later on. And finally, if you're a buyer, what's the selection look like? Right now, there are 205 homes for sale on the market. That's the total inventory, the entire pool of homes that buyers have to choose from. So we've got a slight seller's market with a median price around $550K. Pretty simple, right? Well, not so fast. When we dig a little deeper into the pricing trends, we find out pretty quickly that those top-line numbers don't even begin to tell the whole story. In fact, the report itself gives us a huge clue. It literally says the market has been cooling and that prices have plateaued. Now, that kind of seems to contradict the whole seller's market idea, where you'd expect prices to be climbing, maybe even aggressively. And this chart right here just drives that point home. See that line? That's the 90-day median price, and it's been pretty darn flat for a while now. We're not seeing big spikes or dips here. What we're seeing is stability, not really rapid growth. So, prices are flat? Case closed? Nope, not even close. There's another layer to this pricing story that totally changes the perspective, especially if you're a buyer. Okay, check this out. While that overall median price is flat, the amount buyers are paying for each square foot of home has actually been going down. What does that mean? It means buyers are getting more house for their money, a really subtle but powerful shift in the market. And this complexity, this weirdness, it isn't just about price. When we look at supply and how long homes are sitting around, we find even more signals that seem to be pointing in completely different directions. So take a look at inventory. The number of homes for sale has been dropping lately. Now, in a typical market, less supply means more competition, which should heat things up and push the market even more in the seller's favor. But that's not the whole picture. Because on the other hand, we have this. Remember that 84 days on market? That's a pretty long time for homes to just be sitting there. If demand was really as strong as the falling inventory suggests, you'd expect this number to be shrinking, not staying so stubbornly high. So now we've got a real puzzle. Inventory is falling, but homes are moving slowly. How can both of those things be true at the same time? This is the part I love. This is where we find the one key piece of information that makes the whole puzzle just click. All those conflicting signals, they all start to make perfect sense once you realize one crucial fact about the Gold Canyon market. And here's the secret. Gold Canyon isn't one single uniform real estate market. No way. It's actually 4 totally distinct markets, or segments, all stacked on top of each other, and they are all behaving very, very differently. Take a look at this data, broken down by price. Each of these rows represents about a quarter of the market, from the priciest homes at the top to the most affordable at the bottom. But I want you to look at the wild differences here, especially in that days on market column. Let's just zero in on the two extremes to make the point. The top quarter of the market, where the median price is almost $1.5 million, those homes are sitting for 126 days. That's over 4 months. Now look at the bottom quarter. Homes around $400,000. They're moving in just 77 days. The luxury end is slow, and it's dragging that overall average way up, while the more affordable end of the market is way more active. And that explains everything.
Okay, so after all of that, what does this actually mean for you? Let's boil all these charts and numbers down into a few key takeaways that'll help you navigate this really complex transitioning market.
So here's the bottom line. First, yes, the overall market index says it's a slight seller's advantage. Second, prices look stable, but the value for buyers is actually getting better as that price per square foot drops. Third, and this is the most important part, this is not one market, it's many. Your personal experience is going to depend almost entirely on your price point. And finally, keep your eye on that market action index. If that number starts to climb or fall consistently, that's your first signal that a real shift is happening.
And that leaves us with one final thought. You've got cooling prices, you've got falling inventory, and you have these vastly different things happening at different price points. Gold Canyon is clearly a market in transition. It feels like the data is balanced on a knife's edge. So the big question is, which way is it going to tip next? Back towards buyers or more firmly into the seller's court?